How are you now?
Good, and you?
Not so bad. Welcome back to Everyday Money. Listen, today I want to get into a subject that I hear a lot on forums and I see a lot on the internet about what should you invest in. So instead of me having to type it out every single time, every post, I'm going to make a video on it. We're going to talk about the number one thing that I invest in, the number one thing that I recommend. But first, if this is your first time to the channel, be sure to hit that subscribe button to grow your wealth, increase your success, put you on the road to financial freedom. Also, be sure to smash the like button for me for the YouTube algorithm. So anytime I see someone post, what should I invest in for X amount of years or whatever, there's always a ton of people who have an opinion, and I'm sure all of them are right in some way. Some folks will say, invest in growth stocks. And then some people will say invest in real estate. And some people will say invest in Bitcoin, dividend stocks, commodities, gold, silver, guns, art, whatever. And all of these things have their ups and downs as far as, for example, like real estate. There is a lot of tax advantages and a lot of ways for you to increase the value of the product, but there's also a lot of downsides as far as transaction costs and time and dealing with tenants and contractors and things like that. Bitcoin, there's not a whole lot of regulation in it. I honestly really have no idea how it works. So I, never recommend that. Other things, exotic stuff like, guns and cars and art and such, that is all market dependent, and there's not, a lot of easy way to get in and out of those types of commodities. Same with, not the same with, but for example, dividend stocks, you miss out on all of the value increases of some of the growth stocks, but you do get the solid returns of the dividend. The one thing that I typically recommend that people invest in is a low-cost total market index fund. There are a lot of reasons for this in investing in these types of things, and we'll get into those, but the one that I recommend across the board is Vanguard's VTSAX Total Market Fund. And we're going to tell you why. So like I said, VTSAX is a total market index fund offered by Vanguard with a 0.04% expense ratio. And this is going to be important, and we're going to get to it down the road. But what it does is it tracks the entire U.S. market. And it uses a reference tool called the CRSP US Total Market Index. And that is made up of approximately 100% of the investable stock market equities, including large cap, mid cap, small cap, and micro cap, encompassing around 3,553 stocks last time that I've looked at it. The advantage here is that you get maximum diversification of your investment dollar. So you're not trying to pick 10 or 20 stocks, any certain sector or anything like that. You are getting 100% of the U.S. stock market, and you are diversified to the maximum amount possible in the U.S. market with one purchase. In addition to that, you get quite a bit of foreign exposure as well. And if you're saying to me, Mike, how do you possibly get foreign exposure with a investment that tracks the total U.S. market and is invested only in U.S. stocks? And the reason that this is because the total market also includes everything in the S&P 500, which are the 500 largest stocks in the United States. And for the most part, all of those have a small to extremely large international presence. I mean, if you think about some of the largest stocks, like for example, Boeing, they sell airplanes worldwide. GM sells cars worldwide. Facebook, Google, these are all worldwide companies. And so in addition to just being exposed to the United States market, you get international exposure on a fairly large level with, again, just one purchase. In addition to all that, the fees for the fund are extremely low. We're talking about 0.04% annual fee for this fund. So you're talking about 40 cents per $1,000 invested at the end of the year cost to run this fund versus maybe almost 1% for an actively managed fund similar to this. In addition to all that, if you buy and sell these funds through Vanguard themselves, there are no transaction costs. So it will be free for you to trade. But let's not take just my word for it. Let's get into the Vanguard site and take a look at its market performance, because if it does track the entire U.S. market, typically the U.S. market returns about 10% annually between growth and dividends. And so let's get behind the scenes here and under the hood and take a look at what their actual returns have been, and then look at their expense ratios on their website so that you're not just getting it from me, you're getting it directly from the horse's mouth. Okay, so we're behind the scenes here in the Vanguard website, and this is the VTSAX, the total market index shares Admiral Fund. And like I showed you here, the expense ratio 0.04%. The minimum investment for the Admiral shares is $3,000. And as you can see, it's got the risk potential of 4, which obviously if you're in 100% stocks, it's going to be riskier than other investments. But with higher risk, higher reward, and if you have a long-term outlook for it, it shouldn't be that big a deal. So we can see here that the hypothetical growth of $10,000 invested in 2010 ends up being $37,189 as of November 30th, 2020. When we look at the portfolio composition, it shows right here the number of stocks as of the latest update here is 3,590, which is a few more than I originally said. And then this is the portfolio composition as far as the sectors that they're in. Technology makes up a big portion of this. So anytime the FANG stocks go up and down, it tends to make this move. But there is a good deal of percentages allocated to other sectors such as healthcare, industrials, consumer, discretionary, and staples, things of that nature. Over here you can see the 10 largest holdings, obviously the tech companies, but then the consumer staples, finance companies, things of that nature. So let's go look at the returns and the performance of this fund that they have here. So right here, the annual returns. The 1-year annual return is 19.14, 3-year 13.21, the 5-year 13.95, and 10-year at 14.07. If you look at it since its inception in November 13th of 2020, looking at 7.62% return over that time period. And these are some just recent investment returns. Year to date is 15.82 for 2020, and that will all depend on when you bought the shares in the fund. If you put all your money in January 1st, 2020, you would have 15.82. But if you dollar cost average or invest at different times, you could have returns higher or lower than that depending on when you put that money in, what the price was at the time. And then when we get here to the fees and minimums, obviously, like I said, the expense ratio 0.04%. The average expense ratio of similar funds is almost 1%. And you can see right here on the fees on 10,000 invested over 10 years. For this fund, it would be $95. For other funds similar to that, it would be $2,086, and you're saving $1,973. That is a big amount when you start compounding that out over time. Again, the initial investment, the minimum is $3,000, and then after that, you can invest any amount over $1, and then they will automatically purchase the shares that are in the right ratios for that $1, or however much money you want to put in there. These are their dividend returns. Obviously, with a lot of these are growth stocks. The dividends aren't huge, but they are obviously invested in dividend stocks because they are listed on the total U.S. market. Like AT&T, I know has a very solid dividend. P&G has had solid dividends, and all the other dividend stocks will be in here as well. So I hope that helps you out the next time that you're thinking, what should I invest my money into? It's a little bit of a boring type of thing. You're not going to be picking the next Amazon in 1999. You're not going to be picking the next Tesla. But what you are going to be doing is putting your money into something that has predictable returns, that is very easy to get in and out of, and very cheap to trade. That's why I like it. It's not a sexy investment, but it will get you rich over the course of time. If you like this video, you like financial stuff like this, be sure to check out the rest of them on my channel. Be sure to subscribe to grow your wealth, increase your success, put you on the road to financial freedom. Be sure to smash that like button for me for the YouTube algorithm. I appreciate you guys watching today, and I'll see you on the next one.